coins is like a huge logistics effort. And that is why once paper got invented invented in China, all the governments or central banks and treasuries started introducing paper based money, which is backed by gold. But by 1971, the gold standard kind of got, what should I say, kind of, US as an economy didn't continue with gold standard, and they started, bringing fiat money or fiat currency, where it is just based on the trust of the governance of the central bank or federal bank. The money has its value. And then eventually we moved into digital world by 2000. Early on we saw the money evolved with credit cards, online banking, and money became more and more digital, but still the control was with central banks, right? But then boom, 2008, we know Bitcoin or cryptocurrency as a concept came. And we all, especially if you are in Web3 and blockchain space, you will talk about freedom, you will talk about sovereignty, self-sovereignty, and people talk about scarcity, deflation, whatever. Whatever narrative which was brought by Satoshi Nakamoto in his white paper. And then eventually we saw the kind of evolution of cryptocurrencies into tokens, stable coins. And now central banks started leveraging the same underlying technology, blockchain, and started building CBDCs, central bank digital currencies. And of course, we evolved and we kind of now entered into decentralized finance, right? Where blockchain replaces the traditional intermediaries like banks or kind of exchanges for facilitating financial services or transactions. So now this is the narrative which kind of goes into the minds of people the moment we talk about blockchain. But if you carefully observe, what did blockchain practice? What did blockchain promise? The promise of trustless trust, right? So blockchain came up with this narrative called a tech infrastructure, a decentralized infrastructure where public owns the infrastructure, can facilitate trust with certain capabilities, which I discussed briefly in the coming slide. So what happened is we evolved from barter to gold coins to paper money to digital transactions, and we know the success story of UPI. But then cryptocurrencies, tokens, non-fungible tokens, stable coins, mem coins, because we know Trump, just before kind of presidential, the ceremony, he launched his own mem coin, which we also saw as a trend, right? So the point is, this which evolved or which came as a utopian idea of creating trustless trust, eventually the greed aspect of it and the unawareness of the general public who invest into this idea or utopian future is where the dark side of it got emerged. So you know the way Bitcoin emerged in 2009 as a hero, and then the golden age 2017 to 2021, where billions of dollars of investments and kind of money went in. People started building DeFi's, ICOs, IEOs, IDOs, right? And NFTs and DAOs, decentralized autonomous organizations. And of course, then blockchain also evolved from in two directions. One is public blockchain, and then second is permissioned blockchain or enterprise blockchain. And we saw very good success stories, which is used again in the space, like farmers in Kenya could borrow globally, and through NFTs, artists could sell directly without middlemen. So all these ideas is something which are pursued, and indeed blockchain as a technology could create value to millions of people. And of course, blockchain was empowering the world. A financial revolution seemed inevitable. But we are only seeing 5% to 10% of the story here. And 90% of the story is what I want to throw light today. the dark side of it. And the same capabilities of blockchain, which I will discuss in coming slides, which brought this revolutionary business models and new way of exchanging value, also created dark side of it. And that dark side of it is very, very tough. And today the whole ecosystem is crying and feeling the need of regulators again to come back and do something to avoid this dark side of it. And always remember, money was originally decentralized. It's not a new idea at all. When barter system happened, there is no central bank or a treasury or any central authority to manage that exchange of value. It is just that the same decentralized nature of money kind of got started in digital world. That's it. And exactly the way money evolved in real world, the same thing started happening in digital world. So now the point is, innovation is always good. Of course, I'm not against, or anyone is not against that. But the dark side of it is something is what is to be regulated. And there is no pure decentralization, to be truthful. Please, because one important point is, what is decentralization, right? Multiple stakeholders or public or private players, whoever, they come into consensus, they maintain certain infrastructure or whatever, equity in that particular blockchain project, whatever, and they come into consensus. But now tell me, if the people who are not even aware of what they are buying and what they are doing comes into this particular consensus game, the game theory comes into picture. And the beauty is, the people who want to kind of misuse or who want to lure the general public can easily lure them. And that is what brought lots of scams and hacks like Ponzi schemes, rug pulls, pump and dumps, and exchange collapses, centralized exchanges. Even today, people in general, like the retail investors, do not understand the custodian and non-custodian wallets, and they just click terms and conditions as usually, which got accustomed in Web 2 into the era of Web 3. And regulatory clashes are happening, like where governments are struggling to control illicit activities and protect investors, and environmental concerns, of course, in some scenarios of proof of work, mining and all. So now regulation, the moment we talk about regulation, we need to also talk about dark side of the technology, because what is regulation, right? So now you are regulating something in terms of the innovation not deviating beyond the ethical boundaries, and making sure the promise of what it is trying to do is being maintained. So in that context, now let's look at blockchain as a technology perspective. If you carefully look, blockchain assures or brings these four capabilities in simple terms. Okay, so traditionally the IT systems are either centralized or distributed, right? But blockchain is a decentralized infrastructure where these nodes are maintained by public, if it is a public blockchain, or maintained by a group of private organizations if it is a permissioned blockchain or a private blockchain. And each of type of blockchain has its own dynamics, basically. Now, what does it do? First of all, now, first, the infrastructure is not controlled by one single entity, which is making it resistant to censorship and fraud, because the ledger or all the transactions happening on the blockchain are available for audit by general public. If it is a public blockchain, always remember. But if it is a permissioned blockchain, you can't control what they do, what they show. Second, transparency and immutability. Every transaction is publicly recorded on a distributed ledger. That means it's not maintained in one copy. Rather, it is maintained as multiple copies across the infrastructure, I mean, in the system. And efficiency and automation, blockchain has this capability called smart contracts, which automate the transactions. And the beauty is the smart contract code, once deployed, is immutable unless until it is a upgradable smart contract. And this automation is what brings reduction of cost and eliminating middlemen, which are common in the traditional financial systems, the custodians in general. And then financial inclusion and borderless transactions, because blockchain facilitates global transactions in the form of those cryptocurrencies or tokens or whatever. And these are the four narratives today which are being misused as well. Now let's look at that. So blockchain has good side of it, and having worked in blockchain space from 2016-17, and formally my blockchain journey started in 2018. So I was one of the very few players, few people who kind of kickstarted it early on, and I kind of had good experience, expertise working with all global protocols. And from that experience of working on both public blockchains and private blockchain projects, one thing I can tell you, if you are not building a blockchain application right, then whatever capabilities we kind of laud and we kind of what should I say, project it as the best of the world, out of the world, can do all the miscellaneous things possible, which is happening right now. If it is not built right, and if bad actors are designing these kind of systems, and they come in, they play with game theory in terms of consensus and control, then the same decentralization and security can be misused, because today we see hackers exploit DeFi loopholes, causing billion-dollar losses. And the same transparency and immutability today, the fraudulent smart contracts stay forever, scams can't be reversed. And the same efficiency and automation which we are talking about, if there are bugs in code, then obviously the same smart contract which is immutable can become a challenge. And the custodian or non-custodian wallets, right, the trust wallets people talk about, if those wallets, the public private key pairs, are not maintained well, and if someone is able to access them, all your assets are gone. And financial inclusion and borderless transactions, I mean, for right people, it is like, yeah, yes, I mean, the transaction fee, which is usually 5 to 6% or 7% global average, I'm getting it at less than 1%. That is what people talk about. But see the other side. The same people can do miscellaneous, anonymous or pseudo-anonymous transactions for terror financing or money laundering or whatever things. So all I want to highlight is this dark side of blockchain is what is being addressed today with regulations and compliance. And now let's look at some of them. So first of all, regulation is not enemy of innovation, obviously. I mean, it is guardian of trust. So if someone is saying that they will deliver X and brought lots of stakeholders into their system, and if they don't, I mean, they don't perform or they don't deliver what they kind of promised, I mean, obviously the regulation will come into play, because I mean, the people who are more aware traditionally have been seen to kind of scam the people who are not, I mean, who have limited awareness in anything. I mean, that is how the world works. That is how the game theory works as well. And if the volume of bad actors in a system increases, then obviously the small portion of good players will kind of get impacted. So that is where India, indeed, during its G20 presidency, prioritized global coordination on crypto regulations, because blockchain is borderless, especially public blockchain, and lots of frauds are happening or coordinated globally. I mean, internationally, right? So in that context, now the global efforts started happening, and FSB, Financial Stability Board, IMF, or Bank of International Settlements, BIS, and lots of, and during G20 presidency, all the, I mean, predominant, all the participating countries, Minister of Finance, as well as the central bank governors kind of had roundtable discussions, and they came up with this global regulatory framework, a standard comprehensive framework, so that all the countries are on same page in terms of how they regulate this crypto and virtual digital assets. Now coming back again to the discussion, now let me define what cryptocurrency and virtual digital asset. Okay, because again this is also something people are kind of confused, because people use different terms for these things. But to simply put it, any public blockchain which has its own native currency in which the transactions happen, that is called as cryptocurrency. Because blockchain basically uses the technology called as cryptography to maintain the integrity and security of this. Because that currency is managed and governed by a decentralized infrastructure, it is called as cryptocurrency. That means if a currency or a, now let's go back further. What is currency then? It is a medium of exchange of value. Now, if that medium of exchange of value is managed by a central bank, like rupee, for example, or dirhams or Sing dollars, so each central bank is governing their own currency. That is why it is called fiat currency. I mean, the traditional currency which we use today. But then every blockchain will have its own native cryptocurrency or native coin. And that is what cryptocurrency means. And what is virtual digital asset? First of all, what is virtual? Something which is not real. It's only in digital world. It is defined in digital world. So virtual, digital, obviously, and asset. Now, what is asset? Asset is something which is a security, obviously, which accrues some value based on what that asset is backing. So in that context, first, all the countries during G20 agreed that first there should be a standard taxonomy in terms of defining virtual digital assets to eliminate confusion and streamline communication among regulators. Because someone says virtual digital assets, someone says cryptocurrency, someone says tokens, someone says security tokens, utility tokens, and someone says, say, I mean, real world asset tokens, right? So there are different types of tokens, different ways of backing its value, like stable coins again. So Bank of International Settlements actually created a kind of tree of money, like how the money and different forms of money are defined. If someone is interested, you can always explore that. Bank of International Settlements, taxonomy of money, basically. Okay. Now, similarly, virtual digital assets standard taxonomy is something which is being defined. And second, anti-money laundering and combating the financing of terrorism or money laundering. Because one big challenge with crypto is, I mean, for doing a bank account, you opening a bank account, you need to do your KYC. But for opening a or executing a crypto, I mean, creating a crypto wallet on a public blockchain, I mean, there is no logic of KYC as such, right? So now slowly all the governments started enforcing the centralized exchanges, especially to facilitate KYC for custodian wallets. And if at all they are dealing with any non-custodian wallets, then they need to map the KYC to the non-custodian, I mean, the wallets basically. So in that context, KYC and suspicious activity reporting is something which is kind of getting standardized as part of this global regulatory regulatory framework. And third, investor protection, because this is very important, right? I mean, as governments, always educating investors about the potential risks associated with VDAs and establishing global standards for disclosures, market conduct, and investment products to empower and protect customers is also one of the line item. And I have seen some blockchain projects where the end customers are general public who do not even know what they are buying, and they are just lured to buy them because they are assured with some returns as such. And third is recognition of virtual asset service providers, basically, right? So developing mechanisms to authorize VASPs. And of course, if you see, there are some countries who are already proactive in terms of giving licenses to these VASPs, and we are expecting something of that sort maybe in India eventually. But there is nothing of that license as such now. But there are some guidelines and certain regulatory aspects which everyone has to follow, which I'll talk in next slides. So now coming to global adoption trends, because one thing is clear, the dark side of blockchain is kind of getting dominated. And that is why all the governments kind of started, I mean, based on the rate of adoption in their respective countries, they started coming up with regulatory approaches, regulatory guidelines, and certain compliances and all. So if you look at the top adopters in terms of regulatory approaches, Singapore is crypto friendly. But the beauty is Singapore is crypto friendly, and they don't allow retail investors to get into crypto. They allow only institutional investors to get into crypto. So that is a very good learning also, which India can see, because obviously retail investors are lured into certain schemes like Ponzi like schemes or MLM kind of schemes. But institutional investors will have their due diligence done. So that is how Singapore has very good regulatory, crypto regulatory guidelines, and they're doing good job in that. And El Salvador, you know, the most I mean, a talking point, because they even took a step of making Bitcoin a legal tender in their country. That means today within their country, people can buy a coffee, do a shopping somewhere in Bitcoin or whatever, right? But of course, it faces its own challenges and some impositions of IMF, and there is a lot of evolving regulatory approaches we can see in such small countries. And USA, we know SEC and CFTC regulate crypto, and ETFs are gaining traction. Now, one interesting thing what USA is doing is, rather than kind of bringing more and more exchanges into the scope, they're giving certain permissions to launch crypto backed ETFs on traditional exchanges, so that they have more control or visibility in terms of what is volumes or whatever is happening. Of course, I mean, people have different perspectives on ETFs. I mean, today's topic is not that. We will take it later. But all I want to tell you is each country has a different regulatory approach. And now, if you look at India, I mean, India has one of the largest volumes of population who deal with these cryptocurrencies. But again, the regulatory side of India is, I mean, still evolving, I would say. And now coming to the key use cases like finance, art, gaming, supply chain, identity, governance, right? So there are various use cases. And for permissioned blockchains and something which doesn't deal with cryptos or tokens are comfortably being used in India. For example, if you take DigiYatra, which is one success story of decentralized identity, is being used. And September last year, Ministry of Electronics and IT launched, MIT launched Vishwasya blockchain as a service, which is again a permissioned blockchain, national blockchain framework, which was meant for governments to adopt a blockchain. So the point we need to understand is general public do not know how to differentiate between public or private blockchains, right? So as startups, if at all you are building something, please make sure you are kind of properly choosing right type of blockchain for what offerings or what services you are going to do. And then regulatory approaches, if you see pro crypto, right, you see UAE, Singapore, and some nations in Europe like Switzerland, they have like very clear cut rules and tax incentives. And coming to cautious regulatory approach, of course USA, EU and India with strict compliance. You see SEC or MICA in EU, or SEBI or IFSCA. I mean, in India, again, each of multiple departments are taking care of different aspects of cryptocurrencies. I mean, or virtual digital assets, I would say. Okay, which I will highlight in next slides. But I mean, India now sits in cautious regulatory approach at this point of time. And the last third type of regulatory approach is hostile. Like China just outrightly banned crypto, and they are pushing their CBDC in that sense. But I think in India, I mean, at least in my opinion, on one side, RBI is working on the CBDC, which is e-rupee, right? But also on other side, various other regulatory bodies are working on defining the regulations of virtual digital assets. So somewhere I see India is kind of working to balance these innovations. And coming to India's crypto regulatory framework, the key regulators and compliance side of it. So you can see RBI, which monitors the financial stability, and RBI in many cases and many, I mean, it has given many circulars also on why cryptocurrencies do not have its own intrinsic value by default, and what are the challenges of cryptocurrencies for financial stability. And of course today RBI strictly doesn't allow cryptocurrency to be used for I mean, for day-to-day transactions. I mean, you can't use cryptocurrencies or these digital assets for your day-to-day transactions. You need to use the legal tender for sure, right? And then coming to SEBI is also something like they gave certain guidelines in terms of the real world asset tokenization, and how, I mean, again, taxonomy of tokens, and it is also working proactively on whether defining a token as a security or as an asset, or the nature of token. So there are various guidelines as well as consulting efforts which are happening on ground. And FIU basically is tracking suspicious crypto transactions for AML, I mean, anti-money laundering compliance. And indeed, all the exchanges in India are required to comply with FIU registrations and data sharing. And coming to Ministry of Finance, of course, we know Nirmala Sitharamanji, like she, I mean, of course, the ministry under her leadership kind of framed this taxation policies where you need to pay 30% tax gains. I mean, tax on capital gains dealing with these virtual digital assets. And indeed, 1% TDS on crypto transactions on exchanges. And irrespective of, I mean, again, this capital gain tax is on each of the asset. You can't combine and say, I mean, I just made collective gain of this much. No. So for each and every asset, you need, if you made a loss, I mean, that is anyways on you. But if you make gain, then on every asset, you need to pay 30% capital gain tax. And IFSCA recently kind of also gave guidelines and consulting. I mean, I think they are not guidelines, but they published a consulting paper on regulating crypto and virtual digital assets. And again, coming to the compliance requirements, these are like, again, these are not exhaustive list. Okay, so these are only like 2-3 highlights of the compliance requirement, but there are many other requirements. Okay, again, it depends on what products and services you're offering as part of your startup. Okay, now coming to global crypto scams and exchange hacks, this is very important because one thing I want to highlight is there are lots of crypto scams are happening. Okay, and lot of exchange hacks. And And one very recent one is a Bybit hack, right? Just I think it was last week or before last week. $1.5 billion worth of ETH kind of got lost. Okay, and the toughest thing is to believe is the hack happened through a multi-sig. So that means multiple signatures, or I mean, even cold wallets. They are also cold wallets, or some of them, those wallets are cold wallets, as I heard. And the point is, the big challenge is even the cold wallets and the people who approved are insiders of Bybit, and they thought it is a usual request, and they kind of approved. So the point is, there are, I mean, this space itself as a whole is evolving, and putting your real money on virtual digital assets should be kind of taken with a pinch of salt. Okay, and Wazirex, so you see one of the largest, I mean, its entity is set up in Singapore, but they operate in India. And the problem is 50% of the funds, I guess, again, like $235 million of exploit happened, multi-sig, same wallet exploit. And the challenge is, again, the other 50% of the money, I mean, sorry, the virtual digital assets which are held by general public are locked by the exchange, citing some reasons of what should I say, um, run on the exchange kind of scenarios. Okay, and people are like stuck. Half of it is already lost because of theft or a hack, and other half is locked with them, and only God knows when that problem gets solved, and how it goes. Okay, so in that context, all I want to highlight is lots of exchange hacks and scams are happening. So whether you are dealing with non-custodian wallets or custodian wallets, the challenges are there. Okay, and gain Bitcoin scam, again, I mean, see, again, don't take me wrong, being in blockchain space, don't think that I'm talking the negative side of it. The webinar's intent is to talk on regulatory and the kind of out of the I mean, out of the scope or blockchain scope of things which are happening. So now coming to gain Bitcoin scam, this is like big scam which came out on light, and ED in India, right? I mean, ED kind of raided this particular founder, and they kind of gave lots of unrealistic returns were promised, and lots of money from public is kind of pulled in. And last but not the least, FTX collapse. This is also one exchange story back in 2022. Even the centralized exchanges, I mean, people lost trust on exchanges. And indeed, when blockchain was designed to be decentralized, these players called exchanges, who are centralized, came to facilitate trading between multiple exchanges. I mean, trading between multiple assets. Okay, and to bring buyers and sellers onto one platform. So again, people, the moment you think that, okay, a exchange is dealing with cryptocurrencies, oh, that's fine, it is blockchain, the transactions are happening on chain, it is immutable. So see, the point is, there are different players and different custodians of, I mean, there is different ways of custody in crypto world also. Okay, and people who are not aware, again, will get. So now you need to also, so say, if you are a startup, it is your responsibility to make sure you are kind of enabling your end users to understand the risks, and make sure they have a way to say, for example, a way to walk away if at all they are not comfortable with that risk, right? So now, red flags to watch is, one, promises of guaranteed high returns. I mean, today we are in the world of uncertainty, and I mean, you can't be, don't I mean, so startups, Don't promise something unsustainable. And investors, don't get into that promises of guaranteed high returns. And lack of transparency or unclear operations. And again, here the biggest problem is people in general do not know what to look at to check the legitimacy of a project. And startups who are doing good job, of course, will make sure their smart contract is audited. They publish their smart contracts, and they make sure that transparency is there on what they are doing with their business model, their revenue model, everything. And the people who do not, obviously they kind of use only jargon, but no stuff in what they do. So in that context, centralized control over user funds, this is also something people do not understand. See, you can design a blockchain to have full control also, which is nothing but private blockchain or permissioned blockchain. But if people do not know that what type of blockchain it is, then again you are lured into it, right? So in that context, scams are kind of happening, and always remember, there are some of these scams which are still the investigations are happening, and there are many scams in past which were solved by regulators, and all the founders are arrested and kind of are behind the bars. So irrespective of the regulatory clarity or regulatory guidelines there or not and all, please make sure startups, whatever you are doing is a sustainable business model. There is a utility in whatever you are doing, and there is no luring of investors by false promises. Okay. So now in that context, again, global scams are scams are same, pretty much same. It is just the people or market which changes. So this is another interesting thing, Morris coin scam which came recently, where fake tokens were sold via MLM model, multi-level marketing model, and investors were duped of 1200 crores. A classic example of pump and dump schemes. Okay. And Ponzi schemes, again, Ponzi scheme is nothing but the the older investors will be paid with the money of new investors, right? That is how Ponzi schemes work. So these are all models. See, again, sometimes let me tell all the startup founders in the group, please understand, even if your intentions are good, but the model in which you are operating is fraud, then no one can help you in the world. Okay. You need to make yourself aware of what models are false, and what, of course, you will be liable or responsible for the outcomes, irrespective of your intentional or unintentional way of picking business models. So just because there is another project picked up and I also took inspiration from it and I also started doing the same, that can't be a reason. Okay. So please make sure you keep looking at, anyways, we will also plan more and more deeper sessions, but please avoid these kind of projects as an investor. And as a startup, please make sure you are doing your market research well before crafting your business models. So what are action items? So now again, the key takeaways, right? I know I spoke the broader landscape and everything, but what are the top 3 action items for startups, or key takeaways for startups? One, regulatory compliance first, right? If you are dealing with virtual digital assets, whether it is a cryptocurrency, token, fungible token, non-fungible token, utility token, security token, real world asset tokenization, fractions, so people are coming up with the different terms, different names, but all I want to tell you is, you need to be regulatory compliant and register with FIU, follow KYC, AML norms, and stay updated on RBI and SEBI guidelines. And transparency and security, ensure strong cyber security, maintain auditable financial records, avoid misleading claims. And third, sustainable business model, please. Avoid Ponzi-like schemes, avoid MLM structures, focus on real utility, and comply with taxations, 30% tax and 1% TDS. right? On any virtual digital, I mean, on the capital gains and any virtual digital asset transactions. And action items for investors, whether it is institutional or retail, basically do your own research. Okay. See, the narrative of public blockchain especially is freedom, freedom. You have self sovereignty, you have full control. It is your wallet, your coins. But let me tell you, with freedom comes responsibility. If you are not aware of what you are dealing with, and if you are not taking responsibility of doing your own research, then you are in soup. Okay, so verify white papers, know the founders, and regulatory compliance before investing. So again, just because you know the founder also doesn't mean it works. Because see, I mean, I dealt back in 2019-20. I know someone like a founder who kind of registered a company officially, right? Invited some big shots, and kind of did the launch, okay, and said they will list it on a Hong Kong exchange, okay, and collected money from public, and boom. Okay, so please understand, the business model should be revolving around utility. Okay, and watch for red flags, please. Avoid guaranteed high returns, vague business models. Okay, I mean, rather than talking the product or service, they talk, this is going to be out of the world, this is first, that this is second, this is the best. Okay, so the narratives should give a pulse of what is happening. And projects without audits, auditable smart contracts, or no visibility on what they are doing. Of course, don't worry. I mean, in India, the regulations are very. See, I mean, whatever regulations came, they are being strictly addressed. And indeed, there are a lot of ED rights, CBI rights, and lots of things which are happening to make sure the bad players are caught. So I mean, startup founders should be cautious of dealing with such models, and the investor should be cautious because it's your hard-earned money. Okay, and the last important thing is choose a regulated platforms. Check whether they are FIU registered, right? And if they are kind of offering some self-custody wallets, like what it is, and be cautious of peer-to-peer transactions, like P2P transactions, like doing a transaction directly with the a bank transaction. Like, say for example, I want to buy a product, I will do it through a payment gateway, or I will do it through a form of doing POS, or some way of doing it, because that way at least banks are doing some due diligence in terms of what is the nature of transactions. But if I am doing a IMPS transaction or NEFT transaction directly to them, then it's a red flag, to be truthful, right? I mean, such transactions are happening in crypto space, and please be aware. I mean, be cautious. I mean, it's, see, again, at the end of the day, for retailer investors or institutional investors, it's hard, it's their hard-earned money. And for startup founders, more than regulatory compliance, please understand. See, whether I am following regulations, whether there are regulations or not, whether there is some gap in regulatory clarity or not, this is not what your thought process should be. As an entrepreneur, as a startup, you are here to create a product or service and create value, add value to your end users. That is first moral regulation which you need to do. See, government regulations is different, but as an entrepreneur, as a startup founder, your moral compass should tell you what you are doing. And of course, any unsustainable business model by nature, it will go off. So instead, make sure as a founder, you're kind of first working on your moral compass, then the regulations, and understand why those regulations are in place. Don't just say, okay, it is there, okay, I will follow. No, I mean, there is a reason why such some regulations come, right? See, always remember, entrepreneurs are job creators. Entrepreneurs are being seen today as the next generation who will drive the country in positive direction. And if these entrepreneurs are not taking conscious decisions, whether technology wise or business wise or regulatory wise or use case wise or whatever it is, then you are unnecessarily becoming a symbol of failure in the ecosystem. Okay, so my only what should I say, request is innovation with moral compass plus regulations and compliance will be a deadly combo. It will be amazing. Okay, and no one can stop a successful project if it has such amazing potential and utility. Okay, so thank you so much for the time. And exactly kind of 1 hour. So I will kind of take couple of questions and we will proceed further. Yeah.
Thank you, Arvindji. If anyone has any question, they may put them into the chat box.
Yeah. So I see some questions in chat. So first of all, as a business entity, can we offer US crypto ETFs to our people in India? And what are the compliance for that in case it is possible? Okay. So see, first of all, I know, again, to be truthful, I don't have a right away answer. Okay. I'm just sharing my email ID in the chat so that you can write to me officially, and I will do some deep dive and come back. But in general understanding of what I have, one, Indians can invest in US, in US stock market. That is what I know. That is what I'm sure pretty much everyone knows. So there are some players who facilitate such investment options, but whether ETFs comes into the scope of that is something which I will kind of check and will reply if you can write to my email ID. Okay. And coming to Gaurav, for a business, what is use case of CBDC? Okay. And why I use CBDC as a payment, and what are the compliance for domestic and cross-border platform? Amazing. Okay. So see, CBDC is central bank digital currency, right? And how it is different from traditional UPI? In simple terms, while traditional UPI or traditional payments are like, they are not that programmable. You have limited options of scripting certain modes of or automations of payments. Say, I can automate my EMI payment, or I can automate my utility bill payment, right? But I can't program it so much. But the beauty of CBDC is it is programmable because the backend infrastructure is blockchain. Okay, so now to give you a very simple example, couple of days, I think yesterday or day before yesterday, Bank of Baroda, and a startup, like a very responsible and good startup in blockchain space called Zolts. Okay, of course I'm not associated with them anyways. So I saw that use case. What they did is they gave programmable loyalty management application services to the businesses. That means now the cashbacks or loyalty programs are traditionally very costly to run. Now banks, because of the programmability capability in CBDC, started giving such services for businesses. So that means you can go to a Bank of Baroda, you can onboard yourself as a merchant, and you can start giving your loyalty programs to your end customers who deal with e-rupee, which is CBDC. right? And what are compliance for domestic and cross border payments? See, the point is, because CBDC is run by RBI, obviously the compliance, again, only the traditional banks and some fintech companies eventually will be part of it. So whatever traditional compliance regulatory guidelines they need to follow for this also, because whether it is IMPS or NETF or UPI or e-rupee, at the end of the day, the instrument or the the digital payment rail is managed by RBI. Okay, so now cross-border payment in terms of CBDC. Okay, so see, let me tell you, Gaurav, CBDC also again has different taxonomies. Okay, you have retail CBDC, wholesale CBDC, and multi CBDC. So multi CBDC is usually a payment instrument for cross-border payments, and the compliance or who can onboard and give those services will be decided by that corridor central banks who are part of that multi CBDC setup. Okay. And what is Indian government blockchain? Okay, so Indian government blockchain, I mean, there is nothing like Indian government blockchain. Basically, MITI, Ministry of Electronics and Information Technology, sometime back in 2022, I guess, came up with this national blockchain framework. And as part of this national blockchain framework, they created a permissioned blockchain tech stack based on Hyperledger Fabric and Sawtooth. Of course, Sawtooth is discontinued now. Now, on top of it, government organizations can build blockchain applications and can leverage the same technology. And someone is asking, okay, Ravi Shankaran, again, same, is it working? Yes, it is working. So you can open this website called blockchain.gov.in. So this is one center of excellence, Shankaran, which is run by NIC, National Informatics Center, who is having a good number of projects implemented, because NIC is also, is part of it's also under MITI body. So they have around 5 use cases. One is certificate chain, one judiciary chain, and they have one student certificate chain, medical supply chain, I guess, yeah, pharma supply chain. So there are many use cases which are kind of being built on top of it. Is there any kind of regulations if we offer tokens or coins that can be used or valid for one platform, on platform use case only? On platform use case. Okay, so Akash, if I understand your question right, you are talking about only within that platform or within that ecosystem only you can use those tokens. So such tokens are called as utility tokens. And one good example I can give you is recently Geo coin, right? Geo came up with a coin which is more a loyalty point or loyalty coin, which can be used or redeemed within the Geo services, right? So if you are dealing with a utility token, right, they are non-transferable, correct? You can't trade them, or they are not transferable. They can only be redeemed within, like cred coin, for example, right? So there are some general guidelines, but there is nothing like token specific guidelines as such when you're dealing with a utility token, because it's not tradable and it's not transferable in that case. So is the CBDC programmability function is open to private players? Yes, slowly RBI has this innovation hub under them called RBIH, and RBIH is doing lots of they are working with lots of startups on various CBDC use cases. So yes, private players will have, private players will eventually, when I say private players, maybe eventually the fintech companies will also get opportunity to kind of offer services on programmable CBDCs. And can we create our solutions on programmed CBDC? I mean, yeah, of course. As a startup, you can go to RBIH and pitch your solution, and if they like your idea, then why not? They can take you as part of their sandbox. Okay. And what are the penalties for non-compliance with crypto regulations in India? So Vasant, the penalties are always proportional to the fraud or non-compliance. I mean, the size of the non-compliance, right? I mean, there is no fixed penalty as such. I mean, it is a combination of multiple penalty. I mean, combinations. Right? So I spoke with many businesses, and their problem is workers take advance but don't come to work. Sometimes they take advance before holidays but never return. Can I use CBDC to solve this? Okay, that's a good Sandesh. I mean, programmable money is that, right? So you can set certain conditions in a smart contract, and you initiated the transfer, but after the transfer is done, certain conditions are not met. If the contract has certain clause and acceptance beforehand, yes, you can recall the money back. Why not? I mean, the programmable money concept is that. Any real action plan and timelines look like for IFSCA on asset tokenization? Since IFSCA announced its tokenization consultation paper and public comments. So, I mean, yeah, see, one thing no one can comment on is a timelines for the regulator, obviously, because they have their own timelines. So the urgency or the push will kind of depend on various factors. So, of course, I don't have any comments on that, Surya.
So,
Yeah.
I think we have taken a good number of questions.
Yes, sir. Yeah.
So, thank you, Arvindji. I would like to express my sincere gratitude to you for taking the time to share your invaluable insight and expertise with us today.
Yes.
Your deep understanding of the regulatory landscape surrounding virtual digital assets, as well as your expertise in the evolving blockchain ecosystem and compliance best practices, has incredibly enlightening. On behalf of SCPI Apiary, I would like to extend a heartfelt thanks to everyone who has joined us today for this insightful webinar. Thank you once again, and we look forward to connecting with you in future sessions. Wishing you all the very best in your entrepreneurial journey. Thank you very much.
Thank you, sir. Thank you so much. And yeah.